Thursday, May 23rd, 2019, Maneco 64, home of alternative economics and contrarian views. So things are getting very interesting. I will focus a little bit on the markets this morning, a little more than usual. We're seeing a lot of weakness here in the stock market early on. It's just before 8 a.m. London. I'm a little later than usual. There's also some headlines. We're seeing a lot of businesses in trouble here in the UK, and to me, that's not surprising. I've talked about in the past how a lot of businesses are actually run on a lot of credit, and if things start getting difficult, they're going to find a lot of trouble. So you've had we're looking at Thomas Cook, that's in trouble. Their share price is collapsed. It looks like it's going to zero. You've got Metro Bank. You've got now as well another company here, Philip Green's Fashion Empire, to shut stores and axe 520 jobs. You had Jamie Oliver. You've got British Steel, which I want to talk about. British Steel could result in the loss of thousands of jobs. BBC says it could be 5,000 jobs. Sky News says it could be 25,000 jobs. And I wouldn't be fooled by the name British Steel. This company, I'll go into it a little bit after I cover the markets, just to show kind of my contrarian view, my economic beliefs, which are of the Austrian school, how can I say, Austrian school bent, that government should not be interfering in business. Governments should be minimal and small, and that businesses, if they can't keep operating in a free market, it's not the government's job to take taxpayers' money to save that company, even if that company going under will result in loss of jobs. I think it's it's not only economically not a good deal, it's also not morally correct to take your money, my money, and save a business that's not worth saving. So I want to talk about that after I look at the market. So right now, 7:53 a.m. London. Yesterday was again another weak day in the markets. Not that bad, but still the Dow finished down 100, S&P finished down about 8, and the Nasdaq finished down about 35. So under 0.5%. But this morning we've got the Dow down another 145. So just over 0.5% at 25,600. We got the S&P down 17 or 0.6 at 2838. And the Nasdaq 100 down 64, just under 1%. Yeah, I think there will be a lot of blaming of what's going on between the US and China. Huawei, we're finding that punishing Huawei is also punishing a lot of other companies that are not Chinese that work with that company. But I think it's a lot of it is scapegoating and finding a reason for the fact that the credit cycle had its legs. The economy in the fiat currency system especially runs in these business cycles, and it's long in the tooth anyway. And instead of blaming the real culprits, which are central bankers who manipulate interest rates, who manipulate commodity prices, who manipulate precious metals prices, who give false signals to businesses all around the world, they're going to blame what's going on between the U.S. and China. Even though it could be a trigger for this, but I would say more it's a natural flow of things. They're going to blame, of course, Brexit for everything. Now they're going to blame Brexit for all the troubles that we're seeing in the UK now. It's all going to be Brexit, even though we know that it's the boom and bust cycles that central bankers create. They're never going to blame themselves, and they're going to try to keep things going and say everything's fine until it isn't. So what about precious metals? Precious metals are actually, not going anywhere the last few days. So they're quite steady. Spot gold is $1274.50, up $1.50. The range has been $1272.50 to $1275.40. That's been the range, it seems like, all week. Silver is at $1447, up about 3. Range has been $1441 to $1452. One thing I would say for my UK viewers, people who are domiciled in the UK, that XgCTCWb has done well. The price of gold in sterling is now 1,010. That's despite the fact that gold hasn't done much in dollars, but the pound is very weak this morning. Again, we're down almost over 1/3% at 126.13. Today, of course, is the British, not the British, but today is the EU elections, and in the UK, we're still going to vote for that. We'll have to see. It looks like the new Brexit party might do very well, and it looks like Theresa May is holding on by a thread. It's a mess in the UK. Of course, they're going to use the Brexit scapegoat for everything, but I've always said that don't fall for that. The real culprit's still the fact that we've got too much debt. We took on too much debt to save all the banks, and those weren't the Conservatives who did that. It was the Labour Party who saved the banks under Gordon Brown and Alistair Darling, the people who created the bubble of the early 2000s. Am I saying the Conservatives are doing a better job? No, they're all the same. But I'm just trying to give credit where it's due for all the debt we have. It's not just the Conservatives, but the Labour. They all, it's just a change of management, really. Things never change, unfortunately. The euro is fairly steady, down only 10 pips, 111.40. Dollar is down 0.1% against the yen, 110.24. Dollar yuan is unchanged, 693.78. We saw crude drop quite a bit yesterday and has continued to drop now. We're now at just below 61 WTI, down 50 cents, 60.91. Brent is below 70, 69.64, down about 60 cents. What about the bond markets? Bond markets are looking interesting. The U.S. Treasury bond market, the yield curve is now really inverting. We got, starting to invert. We've got the 10-year yield down 2 basis points at 237, and the 3-month at 237 as well. So it's flat, but it's kind of, it was upward sloping a little bit. What about does that mean Charles Nenner is wrong about the fact he thinks bond yields are going to go higher, that bond prices will go down? It doesn't mean he's wrong. Markets can do things in the short term. I think there's a lot of also talk about China, with the trade war, worries that they could unload a lot of treasuries, and when you unload treasuries like that, you force the price of treasuries down, and yields go up, interest rates go up. China is the biggest, one of the top creditors, along with Japan, of the U.S. government. Says here in the FT, U.S. Treasury bonds, trade war sparks fears of China weaponizing treasuries. Recent $20 billion sale of U.S. debt could not be explained by typical ebb and flow of Beijing's holdings. So we need to keep that in mind, in spite of the fact that we're seeing yields come down right now. So, yeah, I was talking earlier about the Austrian School of Economics, that I'm a proponent of that. And the Austrian School of Economics is based more on, it's not a very, how can I say, mathematical or equation like School of Economics. Is more based on human action and consequences of human action in the economy. Their main mantra is that we need small government, we need the rule of law, and we need sound money, and that government should not be involved in running the economy at all. It's the opposite of the Keynesians, who are unfortunately in charge, have been in charge for a long time of the major economies of the world. And some people might say, no, they're not. But we wouldn't have governments, taxing 40 to 50% of the economy if it wasn't the Keynesians. The Keynesians, on the other hand, they're like the opposite of the Austrians. The Keynesians don't trust the free market. They don't trust, the general public to. They don't trust the free market and the general public, and a price. The price is set in the free market to keep things going. They think that we need bureaucrats, central bankers, like tinkering with the economy, and the only way they can do that, of course, is by having government interfere. It's like a fascist system, because the only way government can interfere in the economy is by force, by taxing people, by regulating. So that's the main difference, and that's why this story of British Steel here, to me, my hope is that they don't bail this company out. Just because it's called British Steel doesn't mean it's British at all. Historically, yes, it was a big company, but it's not the same thing. And you might say, oh, what about the jobs? Well, no. Why should your tax go to the government, and then the government take that money and bail out a company that's failing? That doesn't make sense. They should leave your money to you to decide what to do. But that's the Keynesian philosophy. And that's what happened also after the financial crisis. They bailed out the banks. I don't think any business should be bailed out by government. So British Steel is actually, if you look here in The Guardian, actually, the Guardian newspaper, it says that it's owned by a vulture fund or a private equity, Grey Bull Capital, rescuer of distressed firms, or vulture fund. I think it's a vulture fund, of course. And this is why even more this company should not be bailed out by the government. It's run by people who worked in the city of London, who worked for the big banks. They're just financial engineers, and and I'll read a little bit here about British Steel. It says British Steel Limited was a long steel products business founded in 2016 with assets acquired from Tata Steel Europe by Grey Bull Capital. So let's read a little bit here about Grey Bull Capital and another reason why this company should not be bailed out. British Steel owner Grey Bull Capital is a private investment firm with a controversial record founded by a group of wealthy heirs and run with the help of a former Lehman Brothers banker. So there you go. It styles itself as a valiant rescuer of distressed businesses, but has amassed a questionable roster of firms that it bought for a song, only to walk away relatively unscathed after they eventually collapsed. Grey Bull was set up in 2010 by Mark and Nathaniel Mayerhaus, the sons of a French corporate lawyer, and Richard Prohagen, the son of Swedish pharmaceuticals tycoon Leonard Prohagen. So here we go. This is what they've done. Since buying British Steel for $1 million from Indian conglomerate Tata, Grey Bull has invested $20 million in the company, but also charged the business $20 million a year, collecting $9 million in management fees alone. It has also accrued more than $50 million in interest on a $145 million loan it made via an entity based in Jersey, offshore. An arrangement, it says, is not for tax purposes. Grey Bull is among the highest ranked creditors to British Steel, although it ranks below the bank lenders and the government's insolvency service. How much of the loan it gets back will depend on the insolvency process that it, but it could, in theory, emerge having made a profit. So this is what it's about. These are just like people, you know, financial engineers using the system, gaming the system to make a punt for very little. For £1 million they bought this company, and then indebting the company, taking all the fees, and then just like pulling the plug when things get bad. And that's why the government should not, in my opinion, bail out this company. Let it fail. Don't encourage these vulture funds. This is not free market. This is using, you know, the government and the taxpayer to backstop, you know, their speculations in finance. That's what it's all about. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.